close, keeping your stops in because it doesn't seem like it's going fast, but then all of a sudden it just runs away from you. We're looking at today about 3 to 4 points on our stops and profit targets. And again, that could differ with each individual, but I think that kind of keeps us in the game a little bit with the volatility that's here. And also your scaling has to be expanded a little bit, so you're not going to be, scaling, getting it right at 91 and underneath a little bit. So there's always like a backup area that we're looking at. But anyway, whatever the situation is, keep your stop in place because there will always be another opportunity. All right, a little bit of pressure here, as you can see. Sometimes you got to work these orders. What can I say? Again, keep your orders in place in the market because sometimes they just go down or up and then pop it right back down. So, I mean, I have my orders in place where my exit strategies are, my entries are, as well as my stops are. And I might have to adjust those based on the price action, right? Like here, maybe I'm going to scratch a couple because I don't like the way it was. If I didn't get out underneath, and I have multiple contracts, maybe get out of some here for a little bit of a scratch or even profit, depending on where your scaling was underneath. Because obviously, just kind of hanging on these lows. Excuse me. But if you're out, that's fine. Then we'll look at the 78 underneath. That's our next support level. You know what they say, sometimes the best trade is your scratch trade, right? I've had a lot of those, by the way. All right. Again, bond market not helping the situation here at all as this market continues to downtick. We have to get inflation behind us. I wish there was a painless way to do this. There isn't. That's Powell. Reducing inflation is likely to require a sustained period of below trend growth, and there will very likely be the same softening of the labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the long run, and we will keep it until we're confident the job is done. All right, the market continues to downtick. Next support level we have is down at the 78 area. While a small relief rally took place after the Fed hike rate was a whopping 75 basis points instead of a colossal full point, the sentiment did not last. The major stock averages closed the session down 1.7%. Treasury yields spiked 7 basis points on the 10s to 364, and they're probably definitely higher. 10s are just getting destroyed, by the way, just destroyed. I mean, they're just like, bond market is telling you where we're going. It's ain't up. All right, so I mean, relief rally is what you're gonna get every now and then, right? 78, next support level we have here. Again, we keep our stops in place. We're not trying to pick highs or lows. We're just scalping. Futures weren't landing less volatile overnight, whipsawing between 0.7 gains and losses of nearly 2%. As investors fret over the state of the economy and the Fed willing to tolerate a painful recession as the key trade-off to keeping lid on inflation. As we continue to downtick here, looking down here at the 78 area. All right, coming down here to 9 and change. Again, depending on how many, if you are scaling in or not. If not, that's fine, then just wait. If the volatility is too great, that also is another, point of fact here that you have to consider if you're trading. You should just wait till the market settles down here a little bit, and then trade the less volatile markets, because this is obviously a little bit 27, 28 probably on the VIX is high, and usually low 20s to high teens is a good calming market, which good ebbs and flows. So again, we got down here to 79 and change against our 78. Again, maybe some of you were able to scale in there a little bit. If not, looks like it's coming back down here. Make an adjustment on your entry points there a little bit, if you're going to. If not, then just scale it out, see what happens. The acceleration in housing prices that we're seeing should help bring sort of prices more closely in line with the rents and other housing market fundamentals. As you know, that's a good thing. Powell continues for the long term. What we need is supply and demand to get better aligned, so that housing prices going up at a reasonable level at a reasonable pace, and that people could afford houses again. And I think we probably in the housing market have to go through a correction to get that back in place. Man, he didn't say anything good about anything or anybody. He's just ripping everyone. All right, we did get down to 78 and change here. Hopefully some of you did get in there, or at least at 79, and you get a nice here rotation off of that. So again, that's why we get out of our other trade, and you get into your next trade here, and that way you're not sitting there squeezing a bad trade and you missed the good one. So hopefully some of you did jump in here. Again, we got down to 78 and change. Not going to be perfect, so you're scaling in, hopefully a point, maybe a point and a half above or below, and you've taken advantage of this rotation. If you had to get stopped out at the 91, then this is definitely making up for that trade. Again, depending on how you manage that 91, we have to work that one here. This 78, we didn't have to work so much. Got down to 78 and change, and rotated right back up to 91. It flipped down, it came back up to 91. I kept saying, let's maybe get out of some here a little bit, lighten the load since we're not appreciating the price action. Again, everybody trades differently, so it's just a suggestion. I'm not telling you how to do this, just kind of giving you ideas here. And the goal here is for you to be able to do this on your own, to determine your risk tolerance and manage that independently of myself or anybody else, because I learned that everybody trades differently and has different risk tolerance. I was standing next to a lot of great traders, and I could never do some of the things that they did. And I'm sure they probably looked at me and said, I can never do what this idiot does. All right, let me repeat the levels again in case you might have come in a little bit late, and we unfortunately can't get them up here, at least for the time being. Our pivot this morning is 37.97. Support, we have 91, then here at 78, then 68, 59, and then 50. Resistance on the upside at 38.14, 22, 33, 43, and 54. All right, let's see if we have any numbers coming out here at 9 o'clock. Leading indicators here is coming out here at 9 o'clock, so a little bit might give us a little bit of a injection of volatility, even though I don't think we need any. Bank of England did boost their rates by 50 basis points. They're a little bit behind but we were behind I think Powell was way behind the curve here. He moved this a little bit slow, right? I mean, I think he definitely was behind the 8 ball here and was talking about transitory, and I think he screwed himself up with now we're just paying the price for these rates skyrocketing up, not even like going normally up. Well, nearly every sector suffered a downturn following the Fed meeting, but whatever strength there was left appeared in defensive consumer staple industry. In fact, 12 out of the top 20 gainers in S&P were part of that sector, including Kellogg, Campbell's Soup, Heinz, Hormel Foods, Smuckers. I like Smuckers. The stocks tend to do better than the broader market during a recession or periods of high volatility. Cheerios or General Mills drove the momentum, finishing the session 5.7% higher. After a strong beat and raise earnings report, sales rose 4% to, well, that's nice. Who would have thought? Who would have thought? All right, again, we are 78 already worked, so we're not taking that. We're looking down at the 68 level next. That's our next level of support that we're looking at. Again, we are not trying to figure out direction here. All we're doing is taking opportunities to scalp the market based on the levels that we gave out. Again, we did go down to that 78. Obviously, you can see it's a little strong little area there. They got down to 77, bounce back up again. But we again, if you did wait and you take it, that's fine. Next level on the downside we're looking at is 68. If anybody has any questions, feel free to ask. We do have a number coming out here at 9 o'clock. Again, we are trading many S&Ps, looking for opportunities to scalp the market based on the levels we gave out at the beginning of the day. I'll repeat them in a minute. In addition to any price action opportunities, right now we haven't really had too many price action opportunities. The market seems to be just directing down to the downside here. If you were looking to sell, I can't even tell you where. I mean, it could have gone either way when we opened up. So, I didn't feel any reason to buy it or sell it. Just let's wait and see what happens, right? So that's what happened there as the market continues to slowly down tick here a little bit. We got next support down at 68. Again, if anybody has any questions, feel free to ask in the chat. We're trading mini S&Ps here. Again, we like to average about 4 or 5 trades a day. That's on average. I think we average that. Obviously, sometimes we trade a little bit more, sometimes we trade less. It all depends on volatility. We don't control volatility, obviously. We just trade whatever's there. And like I said, sometimes we have more opportunities to trade. Sometimes we have less. But we pick our spots. The thing what we try to do is to make sure we don't over trade. Don't like to give those brokerage houses more commissions than they're already getting. And just stay focused. And we also focus on the morning hours. I think we have for what we do and for the opportunities that are there, especially when there's not a FOMC results or anything like that. The morning hours do trade better for the dynamics that we offer with our scalping opportunities. I think there's more traders trading. There's more ebbs and flows. You get in the afternoon, it gets a little bit more tighter ranges and opportunities for us are not there. Obviously, if we don't have FOMC stuff, that does throw a wrench into the situation. So again, if anybody has any questions, anything that I say as far as levels are concerned, or trades that price action trades that might happen. So far, like I said, nothing. We teach in our education course where we show you how to manage these trades, find these areas, and then manage the risk involved with them, like scaling in, how many contracts you trade. If you're going to scale in, maybe some of you don't scale in because just too many contracts and volatility is too great. That's fine. We always talk about just being patient and waiting for those opportunities. But whatever it is, we talk about them in our education course and help you maximize profits with what your risk tolerances are. All right, so we have a number coming out here in about 3 minutes. See if it moves the market. Obviously, on the back end of yesterday, it shouldn't, but it's a big number, so we'll see. Sometimes I just don't understand why this market is. These people are so excited today, relieved that it wasn't a point, so they rallied it off the number. But the market continues to be under a lot of pressure. They're still reacting to the release of the minutes yesterday, which and a commentary. But I don't understand how they actually thought it was gonna say something good. You know that I don't get. All right, we're slowly down ticking here again. We gave you our levels earlier. All right, it took some of the volatility out of the market here a little bit. It slowed down a bit. I guess they slowed down it also. Whatever. Anyway, but that's where we're at. All right. We got a little resistance around the 95 area right now. Like I said, right now, resistance would be around the 95 area, 95 to 97, which is our pivot. Our bonds, though, not happy. Not happy. The more that bond market continues to jump there, the more it does not look too good. Right? Does not look too good there, the bond market. All right. All right, little rotation here. And they tried a couple times, but they definitely sucked out a lot of volatility right now. So little resistance around the 97, 95 to 97 area, at least for the time being. Again, if anybody has any questions, feel free to ask in the chat. All right. We are just kind of hanging here on the lows. Resistance around the 95 to 97 area. See what it wants to do there if it gets up there. Otherwise, downside support would be down at the 68 area. Kind of in the middle here. You'd be guessing here as to which way this thing wants to rotate. I don't know where you would want to get in or get out. So I am just being a little bit patient here and waiting for an area to get triggered that I feel confident in the ability that I think might give me an opportunity to scalp the market. The reason I feel confident is because I've seen these areas work in the past and I understand why they're working. So anytime I put a trade on, I'm always looking for reasons to trade, reasons based on the technical analysis that we do or the price action opportunities that occurred. I've seen them work in the past. So these are all reasons to get into an area or to trade versus just, you're seeing the market go one way and I'm deciding I'll just jump in here and see what happens. Kind of hard to do that if especially with these markets because they can turn on a dime, right? They can really, so finding area, look, and all the work that I've done and everything like that, it might not even work. So, but at least I've given myself a decent chance at those areas because I feel more confident than just jumping here in the middle of the this range that's being created. Again, that's the way I trade. It doesn't mean that you have to. If you uh, have your own thing, that's good too. I'll repeat the levels again, and these levels we gave out at the beginning of the session. Our pivot this morning is 37.97. 37.97. Got a resistance at 38.14, 22, 33, 43, and 54. Support below at 91, 78, 68, 59, and 50. Support pivot 97, support 91, 78, 68, 59, and 50. Resistance on the upside at 38.14, 22, 33, 43, and 54. Now, we said we have resistance at the 95 to 97 area. You can see here, we zoomed right up to that 95 area. So maybe some of you were able to, like I said, wait for opportunities to get in. Maybe some of you got in there at the 95 or around 95. Either way, that was an area where we thought we'd have some resistance, and the market is nicely here rotating off of it. Instead of just trying to find some other area to jump in, you had to wait and be patient and wait for the market to give us a good opportunity. So the market did drift all the way back. We said we have resistance between 95 and 97. Got up right up to 95 there and came off. Hopefully some of you scaled in around there. And got a nice little quick rotation off of that level with taking no heat whatsoever. All right, so nice little rotation there against the resistance area there at the 95 area. All right, we got right up to the 95 area there and then came off. Now we're just kind of neutral again. If you're trying to stay short, that's great. Have a trailing stop. I would probably cover them right around the 85 area if you still have them. All right, nice rotation there against the 80 to 95, and now we're just coming back here into a little range. Probably flat here again. This is a little choppy area that we were trading in for a while there. All right. So right now on the upside, we get above 38 even. I think we might rotate to, or we'll be looking at other upper resistance areas. So if we were looking to, I think we get above 38 even, and we hold, then maybe we'll be looking at the upper levels. As right now we're just still under pressure, still couldn't get above our pivot there. And now we're just back here in this range, and we're flat and not really doing anything. So underneath, got support down at 68 on the upside. We already tested the 95, so that's not a level that I'll be looking at anymore. Probably looking above 3,800 is maybe a little bit of a buying opportunity. All right, we got the just show you the interest rate situation here. 2 years are trading at 407. That's pretty a lot. Uh, Solidly above the four. The 30-year, which again shouldn't be this way, is trading at 355. So what is that? 50 basis points inversion. That's a lot too. Again, creating the impression, and this was always the case, of a quote unquote hard landing, or better yet, recession. Um, so yeah, the tens are trading at 359, which is again inverted with the 30s. 30s are 355. So even then, even though it's small, it's still pretty nice inversion. So very much craziness in the bond market, creating the continued belief that the policy that the Fed's making is going to create a downturn. But again, I don't understand why this is like old news as far as I'm concerned, that the market has to get credit. Maybe it just that's what happens with markets. They just ebbs and flows. They go up, they go down a little. And somebody comes and says, "Oh, the market's oversold," so they go buy it for a few days. Nobody's saying that today. We are definitely on the lows here. But yeah, so the bond market definitely telling you not a good story. As far as as far as the stock market is concerned. I mean, the question here is like, okay, well, we know it's going down, right? Longer term, maybe. So just somebody goes, "Who do you think is stuck?" I go, "Well, probably a good time to buy some stuff if you've been waiting for it to. You've been waiting to buy stuff. It's probably a good time to buy some stuff." Really? Like, what do I know? It's because I tell them I trade. They always say, "Oh, what's going? Where are we going next?" I'm like, "What? What do I know?" We are definitely in this range, right? That the market has created. right? As you can see, we're just chopping around here. They rally it, they break it, they rally it, they break it. Kind of hard to get, where you're jumping in is always the key. And we talked about, finding good reasons to trade. So if you did have a reason, then that's good. I don't know where these reasons could be. We did have one reason. If you are trading with us, maybe the 92, 93 area would have been a little bit of an entry point on that last pop back up if you were a little aggressive. But like I said, right now we're just kind of bouncing back and forth here. And again, patience is important. We got support down at 68. And then I'll just give you a couple other levels here underneath 68 in case the market continues to downtick here. Like I said, I never know which way these markets are going. Below the 68, we got 59, 50. Then we have 40, 26. Give you a couple levels here underneath in case we usually it means that the break is over. Every time I give you more levels, one way or the other, it means it goes the other way. You too, Chad. You have a good one. Again, we are in the range here. It might be a big range, 90, 95 down to 75, but we're in the range, give or take a little bit. Again, we get above 3,800, we might pop back up a little bit. I don't know how much. The bond market here not helping the situation at all. Bond chart is all the way on the left there. It's a 30-year bond chart.